Welcome to today's Explainer. We are diving straight into the macroeconomic jungle today to validate exactly why you feel so broke in the middle of this cost of living crisis. Look, if you've been working your tail off, saving your leaves, but somehow still feel like you're falling behind every single time you hit the grocery store, you are absolutely not alone. Today, we're mapping out the predators, the traps, and for sure, the ultimate escape routes.
Here is our survival map for this explainer. We'll be hitting 1. The rich monkey illusion. 2. The inflation monster. 3. Supply chains and bottlenecks. 4. The debt trap. 5. Beware of financial bubbles. And 6. Surviving the financial jungle. Let's get into it.
Section 1. The rich monkey illusion.
We've got to start with the core problem keeping you up at night, which is that painful disconnect between the nominal earnings you make and your real purchasing power. Basically, the leaves you earn versus the actual bananas you can buy. Think about it. If you make 100 leaves, hey, that feels fantastic. But if banana prices suddenly spike by 20% and your wages stay completely flat, you are effectively getting poorer every single month. And you know, this isn't just some new modern feeling. Back in 1919, post-war demand surged 20% while worker wages stayed completely flat, and it led to massive strikes. Making more leaves is literally just an illusion if those leaves can't buy the exact same amount of bananas.
Section 2. The inflation monster.
So how does this build into the apex predators hunting your wealth? Well, it starts with the inflation monster. There are 4 main engines of inflation that explain why a single banana that used to cost 1 leaf now costs 5. First, you've got demand pull. Everyone wants a banana, making them rare and valuable. Second is cost push. The farmer simply has fewer bananas to sell, so up goes the price. Third, production cost. The actual seeds to grow the tree become more expensive, and the farmer passes that cost right on to you. And finally, monetary inflation. This is when the government just creates way too many leaves out of thin air, making the leaves you already have worth a whole lot less.
Of course, it's not just the price of goods eating away at your wealth. It's taxes. And we really need to bust the myth that your entire income is taxed at the highest bracket. That's just not how it works. You actually pay 0% on your first $10,000, then 12% on the next $40,000, and it's only that last chunk, the final $50,000, that gets hit with the 22% rate. Understanding this is absolutely crucial so you don't make fearful career decisions, like turning down a raise because you think it'll actually lose you money. It won't.
Now, we also have to watch out for stealth inflation. You've probably noticed this at the store. It's shrinkflation. Instead of explicitly raising the price of a banana from 1 leaf to 2, these massive guerrilla corporations just sell you half a banana peel for that same 1 leaf. They might swap out ingredients, mix your bananas with cheaper coconuts, or just rebrand leftovers as a brand new product, hoping we as consumers simply won't notice the package got way smaller.
But what happens if all of this goes completely unchecked? You get the terrifying loop of hyperinflation. This is what goes down when a government prints free money until the currency becomes totally worthless. It starts out as a trap, right? The government prints leaves so you can afford those expensive bananas. But that extra money just makes prices surge even higher. Suddenly, prices are doubling daily. Apes literally need wheelbarrows full of leaves just to buy a single peel. And eventually, the whole system just breaks. All those worthless leaves are burned for warmth, and the jungle has to switch to sticks as the new currency.
Section 3. Supply chains and bottlenecks. Let's zoom out to global forces, because a distant supply chain shock can ripple directly into your local grocery store. It's not just local farmers deciding prices. Think about major geographical choke points. If pirate monkeys or global conflicts block the Strait of Hormuz, or the bendy bit of Hormuz, banana tankers physically stop moving. And this is a big deal. It doesn't just mean you can't put gas in your banana car, it drives massive cost-push inflation, spiking the cost of everything from fertilizer to food packaging, all the way to the asphalt on the roads.
And to put that into perspective, 20% of global banana exports pass through that one narrow gap. 20%. 1 in 5 exports. When you choke off a fifth of the world's supply in a single waterway, grocery store prices don't just briefly spike, they stay artificially high long after the blockage is cleared. It's a real wake-up call to how fragile our global jungle actually is.
Section 4. The debt trap.
Pivoting from global bottlenecks, let's talk about the personal traps that drain your wealth, the debt that keeps us chained to the trees. Say you want to buy a house, but you aren't rich, so you get a loan, a mortgage. Did you know the literal translation of the word mortgage is death pledge? Seriously. Whether you get a fixed rate that stays the same or an adjustable rate that goes up and down like an elevator, the bank is charging you compound interest. Add in application fees, appraisal fees, title insurance, and closing costs, and you quickly realize why buying a home feels like carrying a giant boulder around. And speaking of debt, welcome to the student loan jungle. This is where young apes borrow an absolute mountain of leaves to go learn fancy big brain words, only to end up metaphorically screaming, "I declare bankruptcy," as the debt just eats their net worth alive. It's wild. You take on this massive liability right at the very start of your adult life, hoping it guarantees a higher income. But when the economy gets tough and you can't pay it back, you find yourself defaulting.
Section 5. Beware of financial bubbles.
When you feel broke, getting rich quick looks very tempting, right? But we have to explore the seductive danger of jumping into hype-driven investments without doing your research. Financial bubbles always follow 4 sequential stages. Stage 1 is discovery. A brand new banana drops. Stage 2 is mania. FOMO kicks in. Every monkey thinks the price can only go up, and they even borrow leaves from the bank just to buy more. Prices skyrocket way beyond real value. Then comes stage 3, panic. Reality sets in and everyone tries to dump their bananas all at once, which directly leads to stage 4, the crash. This leaves everyday apes holding worthless peels while the early investors run away with all the leaves.
Think about the massive AI bubble we're seeing today. We hear constant fears about AI taking everyone's jobs or taking all the water just to cool their servers. But when you look closely at some of these heavily leveraged companies, the writing is incorrect. The drawing is off, and it's propped up entirely by big banana companies throwing leaves at it just to create hype. It's like an AI slot machine. The takeaway here: don't let the fear of missing out drag you into a bubble where the underlying asset isn't actually producing real, tangible value yet.
So after reviewing all these predators and traps, the inflation monster, the death pledges, the supply shocks, and the hype bubbles, we really have to ask ourselves a critical question. Are we just trapped in this jungle, doomed to be broke forever? Or is there actually a way out?
Section 6. Surviving the financial jungle.
Let's talk about how we fight back and build a sturdy financial shelter. It all comes down to diversification. Spreading your leaves across different assets is hands down your best shield against the jungle's volatility. If you put everything you own into one single banana stock and a storm wipes it out, you are ruined. But if you hold index funds tracking 500 different companies, maybe a little real estate, and some commodities like gold, well, a storm might ruin the bananas, but your coconuts and apples are going to keep you fed.
So here is your actual survival guide. These are the actionable takeaways to passively grow your wealth faster than inflation without having to obsessively stare at stock graphs until 6 a.m. First, save an emergency leaf fund that covers 3 to 6 months of expenses. Just keep it tucked away. Next, use dollar cost averaging. That means you just invest a small, set amount consistently, totally ignoring what the market is doing that day. Put those leaves into passive index funds or ETFs, which historically offer low risk and steady consistency. And above all else, never, ever ape into an investment just because you have FOMO.
To wrap up this explainer, I want to leave you on an empowering note. Financial education and community, that is how we survive. The whole system can be incredibly intimidating, and it's full of jargon specifically designed to make you feel small. But by understanding the basic mechanics of money, taxes, and investing, you completely strip away that fear. Share this knowledge with your troop, because ultimately, apes together, strong.
I'll leave you with this final, provocative thought to really spark your curiosity about compound interest. If you planted just one leaf in a diversified fund today, how big could your personal banana tree grow by the time you retire? Just one leaf, planted wisely today, has the absolute potential to outpace the inflation monster and break you out of the debt trap over time. The jungle's wild, for sure, but you now have the tools to conquer it. Thanks for learning with me on this explainer, and I'll catch you in the next one.